What's up, guys? Zach here from iTrendz. I'm here to talk to you guys about risk management because it's really, really important that we address this immediately, and we'll actually be doing a class on this in the next 2 weeks. It'll be a 45-minute class, and it'll get a little bit more in depth. But I do want to put this out here as a rule base. I have 3 rules that I want to talk to you about risk management. One is the 20% rule. The other is the you denominate your take profit rule. For me, it's 20%, so I have 2 20% rules. And then the third one is I'm not looking for home runs all the time. You have 3 rules. I'm not looking for home runs all the time. We want to be consistently profitable traders, right? So let's break this down. I want to make this nice, short, and concise for you guys. I don't want to run it over a bunch and run your ears off. So let's make this really concise. Let's say you start with $2,000. This is the 20% rule. The 20% rule is that you don't put more than 20% of your portfolio's net worth into a play. And the reason for this is because if you do any more and that play goes to 0, you are hurting your ability to make that money back and then get above your starting value. You are hurting. Literally every percent that you tack on there is becoming detrimental, and you are putting yourself higher at risk for not being a profitable trader. So we stick to 20% because you could take a 20% fall on your account at $2,000, still have $1,600 in the account, and be perfectly okay to get that back above $2,000. But if you were to put 50% into a play, you lose all of it. You are now done 50% and only have $1,000. That is significantly less. You literally only have $200, which is 50% less than $400 to put in a play to then make that money back up to $2,000. So with this being said, I also want to do a little math. If you put 50% into a play and it's a 0 play, you lose. At $2,000, you go down to $1,000. That's a 50% loss. But at $1,000, that's a 100% gain that you have to make to get back to $2,000. Does that make sense? So a 50% loss puts you down 50%, but to get back to that starting value, you then have to get up 100% to get to that starting value. So that's compound interest, literally, in the most simplest form. So let's reel it back. 20% rule. No more than 20% of your net worth of your portfolio in a play at a time. No more. It can be less by all means, 5, 2, 10, 12, but no more than 20%. Why? Again, because it's manageable. That loss is manageable over time. 50% losses, not manageable over time. So let's do some math. You start with 2,000. 20% into a play, that's 400, right? The second rule is your take profit rule. For me, that's 20%, so let's use a 20% into the play and a 20% out of the play rule. Take profit is 20%. So 20% on 400 is $80. So what do I net? I net $80. So I come back the next day, my portfolio is at $2,080. But I stick to that number 1 rule, which is 20%. But now my 20% is actually of 2,080. Not 2,000, but 2,080. So now we've incrementally gone up here. So with that being said, now you are able to put $416 into a play. So now when you put $416 and you profit 20%, you take that out. Now your profit on that is actually $83 and not $80. It's actually $83.20. But it's not $80 anymore. You gain $3 extra this time because you're sticking to your rule. That's compounding. No, that's not it. 2,163 point some decimal. You have $2,163. You started with $2,000 the first day. The third day, you're at $2,163, adhering to the 20% in a play maximum and 20% take rate. That's your own to denominate. That's just me. 20% take rate. I'm at 2,163. So what's 20% of 2,163? It's about 432. Just about. It's a little bit underneath that. 432 in a play. 20% of that is now anywhere between 86 and like 88. I can't do the math really quickly. But now I take 88. So the first gain at that 20% take rate with 20% down, let's think of it that way. 20% down for the 20% take rate. I made $80 the first day. The second day I made $83. The third day I made $86. At the end of all of that, I came back and I had a really, really awesome streak, and I was over 2,200 in the account. And let's, for easy math, say that you made $200 over that 3-day course. Now you're at 2,200 and 20% of 2,200 is $440. So now your max in the play is $440 when you started at 400. What I'm displaying to you guys right now is compounding in its simplest form. We are leveraging our money, which is extremely important. Again, if you are in a play that is going to decimate your account, it is going to make you unable to trade. Again, before you put money in there, it is going to cause you to be at a worse financial position. Then you are over levered in the play and you shouldn't have even been in the play in the first place. Again, stick to that 20% down maximum at all times in your trading career, and you will begin to see consistent profits. The number 2 rule is a take profit rate that you denominate for yourself. For me, it's 20 to 30%. That's realistically what I look for a first take profit rule. I want some money back. I just put my hard-earned money in there. I want my damn money back. I understand that the play is going to 80%. I'm taking some at 20 to 30 because I'm securing some gains. I don't need to take 50% of that play off the table. I can take 25 or 15 or 10% off the table there, depending on how highly probable that setup is. But the point is that I'm always taking money back. That I'm always taking that 20 to 30% out of the play and putting it back into my pockets, so that the next day when I play that same stock, I've got more money on the 20% down rule than I did the day before. And it might be incremental and it might seem like not a lot, but over time, that's how you make money consistently. 1% every day is better than just trying to make home runs, which leads me to my 3rd rule here. Again, this rule. The 3rd rule, don't always look for a home run. Don't be fiending and looking for the greenest of green plays. Look for the highly probable, the highly consistent play that you can repeat on a day-to-day basis and profit off of every day. It would be amazing to have been in the AMC run-up, the GME run-up, or the Tesla run-up that just recently happened. It would be obviously amazing to make hundreds of thousands, tens of thousands, millions of dollars off of those. Yes. But would I take that over being consistently profitable 1% every day, every single month, month over month, year over year, decade over decade? No, never. Because that is what's going to make me a millionaire. That's what's going to cause me to be financially free. Not that one time that I get lucky and smash a home run. No, I don't want that, because eventually you're going to strike out. So again, a recap, 20% rule, 20% down, no more. Less, okay. Assess the risk, and then you can say to yourself, okay, this is a little bit more risky. The market's looking iffy. I'm going to put 10% down only. Good for you. You're assessing your risk. No more than 20%. Second rule, take profit rule. For me, again, that's 20%. I want money back in my pocket. I put my hard-earned money down. I want it back in my pocket now. Third rule, don't always look for a home run. Don't always look for a home run. You will strike out and it will decimate your account. If you are in that position, even if you're not in a home run and it's on a high probable setup, but you are in a position where that would put your account in a very bad position, down 50%, down more than 20% on the account, you're over leveraged. Wait on the play, watch how it plays out, learn from the play, simulate the trade, if anything. Learn how to play the play so that when it comes time for you to be able to be in that range of that 20% down range and you can play that play finally, you know exactly how to execute on it so that you can consistently be a profitable trader. Again, this is Zach at iTrendz coming here hot with your risk management laws and rules of the day. We are going to be doing a risk management class come the next couple weeks here, and I highly suggest that everybody attends it. Please. It's really, really important. We are here for you guys. It actually saddens us that we can't, it really just, we want to be here for you guys. We are here for you guys, but we feel like we don't do enough. We are consistently under the pressure that we don't do enough. And so we will consistently be here to provide for you guys, but we need you guys to also utilize our value. We're here for you guys. Utilize us. So anyway, this is Zach. I'm out. I hope you learned something today that will impact your trading monumentally, that you learn something today that you will carry through your entire trading career, whether you're here with us for a lifetime or not. Again, I'll see you later. Have a good weekend. It's a 3-day weekend. Bang, I'll see you next week.